Hi, welcome to Christensen Wealth Management. I'm Michael Christensen. It is a cold Sunday morning here in Colorado. I'm out walking the dog and wanted to share my thoughts with you on the number one mistake I believe that investors make, and that is the fallacy of buy and hold investing. I became a financial advisor January of 2000, and I immediately went through the 2000 and 2003 stock market crash, and the years later went through 2008 and 2009, and I have discovered that buy and hold investing wastes about 50% of investors' time. And I don't know about you, but most investors are just clawing their way to their financial goals, trying to get ahead, and wasting half of your life going nowhere is just simply unacceptable. In 2000, if you had invested in, let's just use the index of the S&P 500. If you had invested in the S&P 500 in 2000, you would have gone nowhere on your investments for 6 years, and that includes dividends. And if you had invested in the S&P in December of 2007, you would have gone nowhere on your investments for 6 years. I've gone back 30 years, so from 1988 to 2018, you would have gone through 1994, 2000, 2008, all those drops, and your money would have gone nowhere for 15 years out of the 30 years. So I like to use the example, and you can find a video on my website at christensenwealth.com. I'll also put a link to that video in this summary description of this video. But in that video I say, if you start investing when you're 35 and you want to retire at 65, that's 30 years. And if you waste 15 years of the 30 years going nowhere on your investments, I'm sure you agree that that is simply unacceptable, and you probably won't make your financial goals. So the key is to try and avoid the big 50% drops in the stock market. And I think we're getting close to another one very soon. Take a look at this chart real quick. I'll put it up on the screen right now. Here it is. In this chart, you will see that we are up in the stratosphere. Now take that chart away, and we are so high on this S&P 500, and it looks to me like we're starting to roll over and get weaker. Not only that, but the Dow Jones Industrial Average, the S&P 500, the NASDAQ, Russell 2000 Small Cap Index, Dow Transportation Index are all below their 200-day moving averages. And when a stock index is trading below its 200-day moving average, historically speaking, that has kind of been an extremely negative outcome for the stock market and for investors. So I ask you to be very cautious right now as we're trading below that 200-day moving average. And if I can be of help, let me know. I'd like to talk to you and give you my thoughts on how I manage risk here at Christensen Wealth Management. And you can give me a call, send me an email, send me a message on Facebook, whatever works for you. And I'd like to take a look at what you're doing and tell you what you can probably improve upon, and teach you, like I just said earlier, how to watch for some of the biggest mistakes that investors make and how to potentially avoid them. Well, have a good day. Thanks for watching this video. And since I am not a fan of buy and hold investing, that's why I like to say getting back to even is not an investment strategy. And that is something that buy and hold investors have to spend many years of their lives doing, is waiting to get back to even. Have a great day, and I'll see you again in another few days on another video. Bye-bye.